raised their capital and reserves to 8% of liabilities by 1992. Increased capital requirements put an upper limit to the fractional reserve lending, similar to the way cash reserve requirements do. What has this seemingly insignificant regulation made in a Swiss city 8 years ago meant to the world? It means our banks cannot loan more and more money to buy more and more time before the next depression, as a maximum loan ratio is now set. It means those nations with the lowest bank reserves in their systems have already felt the terrible effects of this credit contraction as their banks scrambled to raise money to increase their reserves to 8%. To raise the money, they had to sell stocks, which depressed their stock markets and began the depression first in their countries. Japan, which in 1988 had among the lowest capital and reserve requirements and thus was the most affected by the regulation, has experienced a financial crash which began almost immediately in 1989, which has wiped out a staggering 50% of the value of its stock market since 1990 and 60% of the value of its commercial real estate. The Bank of Japan has lowered its interest rates to 0.5%, practically giving away money to resurrect the economy, but still the depression worsens. Due to the $20 billion U.S. bailout of Mexico, the financial collapse in that nation is already known here. Yet despite the bailout, the economy continues to be a disaster. One huge debt after another is rolled over as new loans are being made simply to enable Mexico to pay the interest on the old loans. In the south of Mexico, the poor have been in open revolt as every spare peso is being siphoned out of the country to make interest payments. It is important to note that a radical transfer of power is taking place as nations become subservient to a supranational world central bank controlled by a handful of the world's richest bankers. As the IMF creates more and more SDRs by the stroke of a pen on IMF ledgers, more and more nations borrow them to pay interest on their mounting debts and gradually fall under the control of the faceless bureaucrats of the World Central Bank. As the worldwide depression worsens and spreads, this will give the World Central Bank the power of economic life and death over these nations. It will decide which nations will be permitted to receive further loans and which nations will starve. Despite all the rhetoric about development and the alleviation of poverty, the result is a steady transfer of wealth from the debtor nations to the money changers' central banks which control the IMF and the World Bank. For example, in 1992, the third world debtor nations, which borrowed from the World Bank, paid $198 million more to the central banks of the developed nations for World Bank-funded purposes than they received from the World Bank. All this increases their permanent debt in exchange for temporary relief of poverty caused by prior borrowings. Already, these repayments exceed the amount of the new loans. By 1992, Africa's external debt had reached $290 billion, 2.5 times greater than in 1980, resulting in skyrocketing infant mortality rates and unemployment, deterioration of schools, housing, and the general health of the people. The entire world faces the immeasurable suffering already destroying the third world and now Japan, all for the benefit of the money changers. As one prominent Brazilian politician put it, "The Third World War has already started. It is a silent war, not for that reason any less sinister. The war is tearing down Brazil, Latin America, and practically all the Third World. Instead of soldiers dying, there are children. It is a war over the Third World debt, one which has as its main weapon interest, a weapon more deadly than the atom bomb, more shattering than a laser beam." Although it would be absurd to ignore the pivotal role played by influential families such as the Rothschilds, the Warburgs, the Schiffs, the Morgans, and the Rockefellers in any review of the history of central banking and fractional banking, Keep in mind, by now, central banks and the large commercial banks are up to 3 centuries old and deeply entrenched in the economic life of many nations. These banks are no longer dependent on clever individuals such as a Nathan Rothschild. Years ago, the question of ownership was important, but no longer. For example, both the Bank of England and the Bank of France were nationalized after World War II, and nothing changed, nothing at all. They endure and continue to grow, now protected by numerous laws, paid politicians, and mortgaged media, untouched by the changing of generations. 3 centuries have given them an aura of respectability. The old school tie is now worn by the 6th generation son, who's been raised in a system that he may never question, as he is named to serve on the governing boards of countless philanthropic organizations. To focus attention today on individuals or families, or to attempt to sort out the current holders of power, serves little useful purpose and would be a distraction from the cure. The problem is far bigger than that. It is the corrupt banking system that was and is being used to consolidate vast wealth into fewer and fewer hands that is our current economic problem. Change the names of the main players now, and the problem will neither go away nor even miss a beat. Likewise, among the hordes of bureaucrats working in the World Bank, central banks, and international banks, only a tiny fraction have any idea of what's really going on. No doubt they'd be horrified to learn that their work is contributing to the terrible impoverishment and gradual enslavement of mankind to a few incredibly rich plutocrats. So really, there's no use in emphasizing the role of individuals anymore. And the problem even transcends the normal spectrum of political right and left. Both communism and socialism, as well as monopoly capitalism, have been used by the money changers. Today, they profit from either side of the new political spectrum. The big government welfare state on the so-called left wing versus the neoconservative laissez-faire capitalists who want big government totally out of their lives on the right wing. Either way, the bankers win. Monetary reform is the most important political issue facing this nation. That clarified, let's proceed to the conclusions in the spirit Lincoln declared: with malice towards none, with charity towards all. At the start of this video, we ask a number of troubling questions. Let's be sure we've answered them.
What's going on in America today? Why are we over our heads in debt? Why can't the politicians bring debt under control?
Why are we over our heads in debt? Because we're laboring under a debt money system that is designed and controlled by private bankers. Now, some will argue that the Federal Reserve System is a quasi-governmental agency. But the President appoints only 2 of the 7 members of the Federal Reserve Board of Governors every 4 years. And he appoints them to 14-year terms, far longer than his own. The Senate does confirm those appointments, but the whole truth is that the President wouldn't dare appoint anyone to that board of whom Wall Street does not approve. Of course, this does not preclude the possibility that some honorable men may be appointed to the Board of Governors. But the fact is that the Fed is specifically designed to operate independently of our government, as are nearly all other central banks. Some argue that the Fed promotes monetary stability. We saw the current head of the Bank of England, Eddie George, claim that this was the most important role of a central bank. In fact, the Fed's record of stabilizing the economy shows it to be a miserable failure in this regard. Within the first 25 years of its existence, the Fed caused 3 major economic downturns, including the Great Depression, and for the last 30 years has shepherded the American economy into